Are you a small business owner? Have you ever wondered how VAT affects your business profits? What if I told you that you could save thousands every year if you understood what VAT is? In this video, we will be explaining what VAT actually is and why it is crucial for your business, how to register for VAT and avoid costly mistakes, the secrets to claiming input VAT like a pro, and tips to manage VAT efficiently so you never miss a filing deadline again.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of TaxMobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
Understanding VAT and its importance for small businesses. Value added tax (VAT) is a tax charged on the value added to goods and services at every stage of production or distribution. Ultimately, the end consumer bears the tax burden, but businesses act as intermediaries, collecting VAT on behalf of the government and remitting it to the Federal Inland Revenue Service. For small businesses, staying VAT compliant helps ensure legal compliance. Adhering to VAT regulation helps avoid fines and legal trouble, which no business needs. Build credibility. Proper VAT management signals professionalism, fostering trust with suppliers, customers, investors, and regulators. Save money. With a good understanding of VAT rules, businesses can optimize pricing strategies, manage cash flow, and even claim legitimate input VAT deduction to reduce overall tax burden. In short, VAT compliance is a smart way to build and grow a strong and sustainable business. VAT registration guide. In Nigeria, VAT registration is mandatory for businesses with annual turnover that exceeds 25 million naira. Smaller businesses can also register voluntarily to boost credibility and position themselves for growth. Here is how to register in 3 simple steps. Get a tax identification number. Apply online or visit the nearest FIRS office to obtain this essential identifier. 2. Complete the form. Fill out the required forms and submit your business details. Update business systems. Ensure invoicing and accounting systems include VAT registration info and meet compliance standards. Working with a tax expert during this process can save you from costly mistakes and make compliance seamless. Understanding input VAT. Input VAT is the tax businesses pay on goods and services purchased for its operation. This tax can be offset against output VAT, which is the VAT collected on sales to reduce the net tax liability to the Federal Inland Revenue Service (FIRS). The VAT Act specifies that input VAT is claimable on 1. VAT on goods acquired exclusively for resale purposes. 2. VAT on goods used in producing vatable goods and services, such as raw materials, consumables, and items classified as stock in trade. Non-qualifying input VAT include overhead and administrative expenses. VAT on office rents, utilities, and general administrative costs cannot be claimed and must be treated as operational expenses. Fixed assets. VAT on fixed assets is capitalized to the cost of the asset and cannot be offset against output VAT. To claim input VAT, the following criteria must be met. 1. Claims must pertain to goods or services directly involved in generating taxable income. 2. Businesses must maintain VAT-compliant invoices, receipts, and detailed records to substantiate claims. 3. Input VAT claims must align with FIRS guidelines and VAT returns must be filed accurately and promptly. In a landmark case between Chi Limited and Federal Inland Revenue Service, the definition of stock in trade was broadened to allow businesses to claim VAT on critical production inputs like natural gas and spare parts. Simplifying the VAT returns process. Filing VAT return is a monthly tax due by the 21st of the subsequent month. Businesses can file return through the Federal Inland Revenue Service tax format portal. The steps include: calculate output VAT, the VAT collected from sales or services provided during the month. Calculate input VAT, the VAT paid on qualifying purchases during the same period. Determine net VAT payable. If output VAT exceeds input VAT, remit the balance to the FRS. If input VAT exceeds output VAT, carry forward the excess or apply for a refund. Make sure to keep VAT compliant invoices, detailed sales and purchase records, and bank statements for reconciliation. Retain records for at least 6 years to meet audit requirements and substantiate claims in the event of dispute. Key takeaways for small business owners. Managing VAT effectively requires a mix of strategy and diligence. Here is how to stay ahead. 1. Only claim VAT on goods and services directly tied to production or resale. 2. Keep accurate records. 3. Regularly match input and output VAT to ensure accuracy and catch errors early. 4. Use technology to automate VAT processes and filings. 5. Set reminders with digital tools to avoid missing filing deadlines and incurring penalties. 6. Seek professional advice for navigating complex VAT situations. 7. Keep track of VAT law updates to ensure you meet all obligations. Penalties for non-compliance. Failing to comply with VAT regulations can result in severe consequences such as late filing, 50,000 for the first month of default and 25,000 for each additional month. For non-remittance, interest on unpaid VAT at the prevailing monetary policy rate. False returns, legal action along with substantial fines. VAT exemptions and zero-rated goods and services. Certain goods and services are exempt or zero-rated under the VAT Act, ensuring affordability for essential items and support for socio-economic goals. Exempt goods include medical and pharmaceutical products, basic food items like grains, bread, and unprocessed foods, educational books and materials, baby products, fertilizers, agricultural chemicals, and veterinary medicines, renewable energy equipment, petroleum products, e.g., LPG crude oil, electricity supplied to discos, locally produced sanitary items, and agricultural seeds. Exempt services include medical and healthcare services, tuition across all levels of education, plays and performances conducted by educational institutions, services by microfinance banks and mortgage institutions, road transport services. Zero-rated goods and services include goods purchased by diplomats and diplomatic missions, goods and services used in donor-funded humanitarian projects. Knowing these exemptions can help you adapt pricing strategies and maintain compliance while supporting customer affordability. Key recommendations for VAT improvement include: 1. Boost awareness with campaigns. Educate businesses on VAT obligations, exemptions, and compliance processes. Adopt technology. Automate registration, filing, and remittance to reduce errors and enhance efficiency. Capacity building. Train Federal Inland Revenue officials and tax practitioners on best practices in VAT administration. Harmonize policies. Resolve jurisdictional disputes and streamline VAT policies for consistency. Periodic update. Review VAT rates and exemptions to align with economic realities and revenue needs. Simplifying processes and fostering collaboration between businesses and regulators can make VAT administration more effective for everyone. Now, let's consider some practical examples of how businesses in Nigeria encounter and navigate VAT-related issues. Scenario 1. Missed monthly VAT filing deadline. Atkins Electronics, a growing electronics store in Lagos, met the VAT threshold with 35 million naira turnover in 2023 but failed to file VAT returns for 6 months due to lack of awareness of the owner. An FRS audit uncovered the non-compliance, resulting in significant penalties for Akin. A late filing fine of 50,000 for the first month and 25,000 for each subsequent month of default. Interest on unpaid VAT at the prevailing CBN monetary policy rates. Immediate remittance of all unpaid VAT and filing of backdated returns. Lesson learned. Filing and remitting VAT on time is critical, and hiring a tax consultant can help businesses stay compliant and avoid penalties. Scenario 2. Claiming input VAT. Chidi Foods, a bakery in Abuja, was charging VAT on baked goods but didn't know they could claim VAT paid on raw materials like flour, sugar, and packaging materials sourced locally. After learning about input VAT claims at a workshop, they began tracking input VAT on all production purchases. They filed amended returns and successfully claimed input VAT credits, significantly reducing their monthly VAT liability. Lesson learned: keep detailed records and understand VAT mechanisms like input VAT claims to save costs. Scenario 3. VAT charge on exempt goods. Musa Pharmaceutical, a pharmaceutical company that produces local drugs in Kano, mistakenly included VAT on invoices for its products for over a year, believing all sales required VAT collection. After FRS audit, some overcharged VAT were refunded to key customers, but the process strained the company's resources. Lesson learned: familiarize yourself with VAT exemptions for your industry to avoid overburdening customers and creating financial challenges. Scenario 4. Penalties for non-registration. Tolu Logistics, a small logistics company in Ibadan, exceeded the 25 million VAT threshold in 2022 but didn't register for or collect VAT for its services. A whistleblower tipped off FRS, which resulted in penalties such as 1. A fine for non-registration, 2. Payment of arrears for VAT that should have been collected, 3. Interest charges on unpaid VAT. Lesson learned: register for VAT as soon as your business qualifies to avoid hefty penalties and complications. Scenario 5. Consumer reactions to VAT rate increase. When the VAT rate rose from 5% to 7.5% in 2020, Ijoma Mini Mart in Enugu, which sells basic household goods, faced consumer backlash over high prices, leading to a decline in sales. To address the concerns, the store focused on selling VAT-exempt goods such as basic food items and introduced loyalty discounts, helping restore customers' trust and stabilize sales. Lesson learned: adapting your product mix and leveraging VAT exemptions can ease customers' concerns and maintain sales during VAT changes. In conclusion, VAT compliance is a vital aspect of effective financial management, which small businesses can transform from a burden into a competitive advantage by mastering VAT regulations, adopting technology-driven solutions, and seeking expert guidance. Proactive and informed VAT management builds trust, improves cash flows, and creates a strong foundation for sustainable growth in the ever-evolving business landscape. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.